Hello, today we'll talk about Bitcoin charts. Yesterday, we were in this area, and from these regions, I was expecting a breakout. Then, as we entered this zone, there was a bounce back, shaving the shorts who had set stops. Behind these highs, and accordingly, behind these on the hourly chart, it will be clearer. I hoped that yesterday's chart would at least make such a move, gathering liquidity in this area, and then there would be some asset depreciation. But it didn't happen. We only made a few $1,000s, a 45% increase, and today the chart dropped nicely. However, we're still in this gray range we expected earlier. It's stuck a bit now, but it's growing slightly. Let's figure it out, think about what's next. Basically, I've noted what I'm waiting for here. Why did this happen? It's because the US inflation macro data came out today, and based on this, they drew such a downward stick for us. Let's switch to the 5-hour chart and see what I'm waiting for globally. I'm waiting for this structure globally, approximately taking us somewhere around 58,800. This will also be the lower boundary of the ascending wedge. From here, we can try to take long positions with a short stop after some small consolidation. I expect an upward movement and our initial targets will be these previous peaks. When the chart drew them during the last peak, it will be our take profit. If you want to join me, I think it will be the right decision. It might be wrong, I'm not sure, but let's try to break through this. I would trade with a stop, but a minimal one. There's no point in setting it too far because there's a chance we might continue further. Let's switch to the chart and I'll show you. If we try to enter here and take 4 takes, we'll get 1-to-1. By the way, even if we become long here and the price moves against us, we'll be without loss because we entered here. We'll take some profit and move the stop to break even, so even if the chart reverses and goes down, we'll take the profit that was already at break even because we entered here. I don't know if you'll try this option or not from these prices. I don't want to enter, but we've gathered such enthusiasts like me who have already believed. Not that I believed in growth, but I hoped they'd take this high because I had to take profit around 64,175. They didn't give it and pushed us down a bit, and now we'll move to the local chart, or rather, to the hourly chart to see what interesting zone we'll aim for. Often, the price tries to take them. Also, we have the lower boundary of the wedge from where it may start to. I thought there would be some consolidation and then a hike to the tops. That's one scenario. There are always several scenarios for market movement. The second scenario is if there's a variant like this, I'll enter long and try to trade upwards. The second scenario we drew earlier was these seller zones that are descending lower and lower, and in this case too, you see this seller zone that we couldn't pass, and what I drew yesterday, this movement here, but we haven't continued yet. Here I was considering the option for a long, maybe to these areas. Now we'll open and see if there's an interesting picture. That's why I say not to set the stop too far because we could be driven somewhere and drop to $50 to $52 or $50 to $5. By the way, what about the moving averages indicator that everyone uses? What's it called again? I think it's the EMA, the exponential moving average. No, that's not it. Let me think. Currently, the indicators overall are barely worth looking at, if I'm not mistaken. Looking at the daily chart, we have a situation where the price is like this, or rather, it's moving like this, and approximately in these areas, it intersects, that is, at $50,000, it's still positive. Well, you can consider it as a plus to your theory. You can look at it like this, with one line going like this, and another one like this, theoretically something like that. Plus, you can view the $50,000 zone as a potential for a decline within the $50,000 range. I wanted to illustrate it for you, but it didn't work out. Anyway, that's why you shouldn't set the stop too far. If it triggers, we'll look for entry points lower. Let's switch to the liquidation map and pay attention to the volumes concentrated here. They're very prominent on both sides. First, we have a volume concentrated right at $50.50, like precisely in this area. These long positions or conservative ones, whoever is entering longs or setting stops here or just liquidations, and we also have volumes concentrated at $67,324, well, in this area, this high. So it's logical what I presumed yesterday, that the chart would take this high. Although I didn't look at this yesterday with a keen eye, and our largest volume is concentrated right behind this high and this one. That is, behind the all-time high. In this range, we have the largest volume of liquidity concentrated. If we simply assess this based on the chart and see where the price will reach faster, we essentially don't care where the chart goes. We understand that from the 50, we'll go long, most likely locally we'll be looking for short positions because there won't be such a candle that just takes off suddenly. The quicker the approach to the level, the more often we'll see some rebound structure for position accumulation, maybe something like that will happen later. Such a more general chart, that is, it's kind of not an original approach. Let me think. What's the name of it? Is it, or will we see such an approach? Most likely it will be sharp and fast, so it will often roll back or it might take off a bit, take the high, and then go into a rollback. That is, this movement might be sharp from both sides, a huge amount of liquidity, but that doesn't mean we'll go exactly there, up or down, or where the liquidity is more concentrated. We might not necessarily go there because I remember when we rose to $34,000, there was unreal liquidity. I remember recording a video about half a year ago in November, and the exchange always wanted to go there to accumulate a good position, but they didn't let it. It seems like we're going down there. I even remember calculating that we were about to turn around and we flew off. The situation may repeat itself, that we won't go to pick up this massive liquidity. It will just remain hanging, or rather, we'll go to pick it up. The question is, in which direction? We'll pick it up in one direction, for example, the upside. We'll trade it like that and fly. There won't be any significant breakthrough that many are waiting for. Many are really expecting it around $50,000 plus or minus. Maybe the chart will concentrate there, but it's not super smart. Therefore, if the price tends here very often, we'll disrupt this area around $50,500. That's more of a global scenario. Locally, however, of course, we're speculators. We need to find some entry points and trade. Each entry point is a risk, and the risk we take is like this. We open a long position, calculate the risk, and set profit targets. So, our stop loss is 25%. Okay, for example, there are 10 positions, well, up to the first position. If you wanted to, say, explore this locally, then we have, that is, the stop loss is 2% and up to the target, 10%. This is a 1-to-4 risk-reward ratio. Well, this is an ideal RR. Even if it were a KT, even if it were like that, it would be very good. Well, at a minimum, we'll be taking around 45%, and at a maximum, 1-to-4 is just great risk management. For example, if you have a $100 deposit, I'm not talking about leverage right now, just $100, and you enter with all $100, you place a stop loss here, and if you lose, you only lose 2.5%, so $2.60 out of your $100. It's critical, $2.60 out of $100. If the worst happens, it's not critical at all. In case of profit-taking, you'll take at least 10% of the position, roughly 10% of your deposit because you entered the trade correctly, right? So, you entered and took 25% of the movement. No, I'm calculating it wrong. Okay, you've got the logic, considering it without leverage. If you take the second leverage, you'll have not 2 but 2.6, you're smart about it, right? So, per leverage, if it's the 10th one, you'll either lose 26% of the position or gain 250% profit. Roughly like that, that's how it's calculated. So, our main task is to calculate the risk per trade from your total deposit on your futures account, or even if you're not trading futures, but trading spot, you still need to calculate it and try to break through some situation. I'm currently more inclined towards the first scenario, not the breakthrough, although I keep it in mind and would like to catch it after, like yesterday. Yesterday, I was drawing it behind this high. I thought I'd hedge, but I haven't succeeded yet, so let it be. Let me have the hedge hanging. Maybe over time we'll break somewhere, and I'll close it, and the hedge position that was closed in profit, bringing me daily funding, I'll accumulate some additional altcoin. That is, I'll have an additional volume to either accumulate somewhere or open a new position. Well, I'm still leaning towards this scenario, not the breakthrough, but deep down, I would like to see the breakthrough because I want to accumulate some altcoin. Well, for example, I have a 100% deposit, well, in general, let's say, hypothetically, $1,000. I have this, I'm 100% in it, and at $50,000, I'll accumulate probably around 50% or 60%, roughly around 70% of the total volume of my stables that I have. I'll accumulate some altcoin, that is, add to my position, accumulate something new. But locally, look, at $67,300, it's very likely that we'll get here, and roughly speaking, based on these prices, it will be, damn, it's really such, it's practically impossible to predict market movements because for me, the market is currently complex. I don't know about you. If you trade, write in the comments. Well, if you've been trading for a while, you've definitely developed some market behavior, and you're trading your own market. Right now, it's a complex market for me in terms of predicting movements, so I've taken a more conservative stance, a more conservative position relative to the market and my deposit, and I'm waiting for some more or less obvious options to enter. So, we've covered Bitcoin.